All right, I hope we get started. Good morning, everybody, and hope you are doing well. I want to congratulate my friends in the JAMS community for the return of CyberCrest, one of our investments. But also, I want to give you good news that one of our tokens called REDO so far listed to 3 exchanges, and I hope you have been able to change, some of you change your life. Now, today, the good news is one of our tokens called DOG, that's run on the Bitcoin blockchain, is going to be listed onto MEX. So I hope you have bought some, and our take profit is at $1, and we could change our lives there. Okay. So today, friends, it's a pleasure to basically have you here. My name is Wealth Coach Julius, and I want to basically, I'm going to make that video, I think, in the day that talks about, that video that talks about, why does the topic want to run away from my head? How to sell in exchanges, especially now that some of you have got issues with, some of you have got issues with, there are people have got issues with, the thing runs out of my head. Okay, so I'm gonna make a certain video and I'll post it onto the YouTube channel of Crypto Ambassadors, basically. Okay, friends, welcome to today's class, and we are basically still continuing with our information, and that is basically support and resistance, one of our topics that we have dedicated time to teach. But today, more than never before, we are going to put our focus on a specific area, and that specific area is patterns. I'm not going to discuss so many because I did those patterns in my previous classes, and the video is on the YouTube channel. I'm just going to do a few more. Okay, I'm just going to do a few, but share the main idea. Share the main idea on how support and resistance works. Okay, and that's where I'm going to put my focus. And I believe today could be my last lesson to this topic of support and resistance that works. Okay. Don't forget the video about a new crypto web. I said I'll discuss that onto the training that will be done at 10 a.m. So I'll discuss that briefly. I don't want it to override my training, but I'll discuss that just briefly in the coming class at 10 a.m. question and answer session. I already told you I'm going to be able to discuss that. I'm not going to discuss it here. But like I said, I'll discuss it on my other class of okay, so let's now focus on our class for today. And I believe you'll be able to love this class today. I'm joining you with another device. Let me try to see how the, let me move away from the Mac here. And I try this other device here and I see how resilient it can be. Is how this device can be more resilient maybe than the MacBook. Okay, so All right. So friends, today we are gonna be able to focus on the most important part of our class, and that is support, resistance, but most importantly, on breakouts and patterns. You know, I want to make sure that I do not forget breakouts and patterns. I want to talk about several of them. And also I want to talk about, I talked about a bear trap and a bull trap, but just to emphasize a little bit about a bear trap and a bull trap, friends. I told you that it's here where you believe that prices are going to go up and then prices go down. To avoid trapping, we talked about and said that it is important as a trader to use what we call confirmation. And I said that confirmation, there are important things that you need to look at. One, what we call a breakout is when a candle breaks a previous resistance. So, for example, if the market, let me say, was resisted here where I've drawn the line here, and then you see a candle coming and breaking that resistance, so that is called a breakout. It has broken a certain area where the market was being resisted. But you need to make sure that this candle that breaks has good volume. It must be a strong candle that has good volume. Do not take breakouts for small candles. For example, if you look here, let me say this was the resistance. Okay, and the market flew from all this side to came here. So such these, they will lead you to what we call a bull trap. Okay, there must be good volume. When I talk about good volume, I mean an example of such a candle. So this has good volume compared to this. So you must look at a good volume. So it's a good way to trade, friends, when you decide to use a breakout strategy for your trading experience. A candle must be of a good volume. And that is very key and very, very important. So let's first discuss what is a breakout. It's very, very important as a trader to know what a breakout is. Basically, friends, this is where we go above a specific resistance. This is where we go above a specific resistance. Now, I'm sorry, there's a lot of feedback here. These guys of Mpuga are making a lot of noise near my home. They should stop. They are over making the noise, so they need to stop. It's now too much. The whole night they are telling me about their Thanksgiving, and it's too much now. It's too much. So if you are the one and you are here, please tell your people to stop. I am tired. The whole night. They recorded this man called Bobby Wine. They are putting it in my ear. The whole night, they want me to go. But we were here to make money. So if you are one of them and you are here, please help me. I'm tired of the thing. I don't know. Is it my network now? Is happening? Can you see my screen? I don't know what's happening. The way the thing is no longer moving now. Yeah. Nothing is working here. What's happening? What is happening here? Sorry, friends, I don't know what's happening. Just give me a few minutes. Let me find out. Nothing is responding to my commands. Good. Hope I'm back now. Okay. All right, friends, what I'm trying to say is that a breakout must be happening uh, when we go above a certain resistance. And it's one of my major trading strategies when it comes to, for example, yesterday I gave you a coin called PHB. PHB. Okay, yesterday I gave you a coin called PHB. And I said it is a 15 to 20% take profit. When I'm gonna trade such, I go in for a little bit longer time frame. I can either do 1 day or I usually love the 12-hour trading strategy. So let me use that as an example. Eh? I need to log into my other device. So let me use 1 day, my other paid version. Okay. Now, this is what happens. Let's start from afresh. We are going to draw support and resistance. And I told you yesterday, and I want to repeat, be consistent, friends, when you are drawing support and resistance. When you decide to draw your support and resistance on weeks, do that. When you decide to draw your support and resistance, body close of the candles, do that. So I'll draw my support and resistance here on 1 day on this coin called PHB. So that is my support line. And remember, I told you yesterday that a good trader will create a support area, not just a line. A good trader will always create an area. So I will come here, pick still a horizontal line, and now I'll just look at the body close of these two candles here. So in between here, I have created an area. Now, also from the current price, friends, I'll look at where the market was resisted. I'll look at where the market is resisted. Let me pick up my tools down here so that I don't overlook for them all the time. So that they always appear on the top of my screen to help me use them well. So these are my favorite tools. Okay, so I will now pick my horizontal line from the current price to where I see the markets being resisted. And basically it is this place. And if I want to do an area, still, I'll pick my horizontal line and look in the past where the market was resisted or supported, and I'll take this. I could go a little bit below, or I could still go a little bit up and create an area. So this is my major resistance, my major support, and this is my major resistance. Now, friends, listen to me very critically. The other thing you can do as you trade is basically to draw what we call trend lines. I explained this yesterday. I wanted to do that on the other side of my 12 hours, but it's not working out because it's not a paid. So I will draw a trend line above the candles. Maybe I pick it from the highest point here and take it to the lowest point. Okay. Now, friends, I want to focus on the different shapes that you already see that are called patterns. Now, what is happening here is just something very easy and very simple. And it has happened in the past. Let me show it to you. I will just pick up a trend line. It's a trend line. Let me pick an example here at this same point and draw it above the candles so that I could play a very nice example. Maybe, okay, above the candles. Good. Now, these are different shapes that we are going to be able to see while we trade. One, these are called patterns. They are patterns. There are many. I discussed them previously. And these patterns, for example, when I draw a sloping line like this, and I draw another sloping line like this, where they meet here is called an apex. And an apex is a point where two lines meet. So this is an apex because this white line has met this orange line. This is an apex because this white line has met this orange line. This is an apex because this orange line has met this white line. Where these 2 points meet is an apex. So forming two converging lines form an apex. Now, this is a sloping line moving up, and this sloping line moving up, these are buyers. These are buyers. These are buyers. And I can still come here. I can still come here, friends. I press this line from this lowest point, just like this. And that's the line I've talked about there. That this line you see here, this one, these are bulls, these are buyers. They are refusing the market from coming down. Like this, like this. They are buyers. And where they meet, this line meeting this line here, it's an apex. And so they form different shapes that we take very, very important. Different shapes that we take to be very, very important. Let me start with this shape here. This shape here is called a symmetric triangle. When you draw a diagonal line or a sloping line like this, and another sloping like this, these are bears. Bears are sellers. They want the market to come down. So they are putting up pressure on the market to come down. These are bulls. They are putting up pressure for the market to go up. These are bulls. So what they form is called a symmetric triangle. Now, we also have other triangles, friends, like the ascending triangle. So the ascending triangle, friends, for example, the ascending triangle, for example, the first one we have drawn, we drew, let me say, sloping line and another sloping line, this, and we say it is called a symmetric triangle. But now we say that we have an ascending triangle. An ascending triangle is where we have a line drawn like this, and we have a line drawn like this. So this is the resistance, and this is the support. So the buyers are refusing the market. So the market moves, let me say, from this point, or from this point, it moves up there, it gets resisted down here, gets supported up here, gets resisted down here, gets supported up there, gets resisted down there, then it breaks through. But I told you about a bull trap and a bear trap. And I want you to see here. This is an ascending triangle. Okay. The market is trying to make a formation, and we see until it reaches here. So maybe you are thinking that this is going to be an amazing, because the market's being supported here and it's being resisted here. So it is called an ascending triangle. Then we have a descending triangle. A descending triangle. And here, like I talked about that already, but I'm going to just discuss a descending triangle where we draw a support and we draw a diagonal line. And the sellers are refusing the market like this. So you find that the market is trying, but it's being resisted. And in most cases, we expect the market to continue in the downward. So this one is where the market, now this is the resistance and this is the support. Here we expect the market to go down. But there are two triangles, friends, that can take the market in all directions. The symmetric triangle and the ascending triangle. So that's why we say that before you become excited about the shape that has been formed, because in ascending triangle, we expect the market to break. We said a breakout, let me just repeat, a breakout is when we go above a specific resistance. We go above a specific resistance. So for example, here, if this market had gone above this specific resistance here, then we could say that the market has formed a breakout. So you should not become excited about any trading approach unless you see that the market has broken the resistance. A breakout is a candle that comes with good volume. Good volume. Okay. Let's take an example of the chart that we have. For example, so I will draw a line, a trend line. Let me say above these specific candles here. Above there. So let me increase. Okay. So I'm just looking at this specific area. Now, we need to understand that trading is probability. Trading is what? Is probability. But you just need to make sure that the market is following your approach. That's when you make an entry. For example, if I want to take an example of this specific area, we can see that I want to just remind you, we said that on a downward trend, when the market's going down, we draw a trend line above the candles. And when the market's going up, we draw a trend line below the candles. Now, you want to be able to make an entry at a specific area. You want to make an entry at a specific area. What are you supposed to look at? For example, here, if you had drawn this line above the candles on a downward trend, and you had drawn this line, because this is an area of support, this line here, and you want to get into this by looking at volume. One, there was volume on this candle, so this was confirming a breakout of this area here. And so as you are planning a breakout here, you want to make sure that you will make your exit at the previous resistance. But you can see that when you drew your resistance here, I don't know, that's where I want to put my focus. When you drew your resistance line there, here, you drew your resistance here. Let me turn it to white. You drew your resistance here at this area. Now, you want to make an entry. You find that This was a resistance, but a candle breaks it, then it gets a test candle, then it gets another candle that closes above it. Then you need to think twice that this is a breakout. And you plan your entry in that specific trade. So you must be able to look at the market respecting that area as a breakout. And once this happens, then you plan to make your entry in that particular trade and to get out at the next resistance. So let me just pull down my script. Good. So you make a plan to enter at the breakout and then get out at the next resistance. Now at this resistance still, which is this one, at this resistance here, after you have hit here, don't become excited that the market is going to continue. Wait and see if the market forms another breakout. And this is what I called a bull trap. And that's why I told you when you are drawing your lines, make sure you draw your lines not at the wicks. Draw your lines at the body close of the candle to avoid bull traps. So once it hits here, before you become excited about your next entry, wait for a breakout. A breakout, I said, is simple. One, the best formula for a breakout is this one. This is the best formula. Find a breakout. Let me explain. One, a breakout, the easiest. There are so many ways, but the easiest is you find a candle that opens below, a green candle. This is the simplest. A green candle opens below and closes above. For example, it's a green candle. This is a green candle that starts below and closes above. But before you make an entry, wait for a test candle. Especially if you see the candle you are trading doesn't have good volume, wait for a test candle. What is a test candle? A test candle is a red candle that forms above the breakout and closes above it. Now look here, friends. This could have been a test candle, but did it close above or below it? Depending on where you drew your line. Now, this is the difference. I drew this line, not now, but this one at the wicks. But if I had drawn this line at the best perspective that I told you, that at the body close of the candle, this one, at the body close of the candle, I am giving you two perspectives to get the difference. I have a question and I need an answer. First, let me draw it. Let me draw another line. That is line 1. Let me draw line 2. Good. Now I'll take line 1 first, and I need an answer. I drew my first line here. I have a question. Was this a good test candle? This one. This red candle. Some answers in the chat. Was it a good test candle? Good. But at the same time, I drew my second line here. Was this red candle a good test candle at the second line? Some answers in the chat. Thank you. Now you get the difference. So if you want to avoid those traps in the market, I would definitely say I'll definitely say that you need to make sure that you avoid the traps by drawing your lines above the candles. Give me a 2 in the chat if you have understood that. Now, like I have definitely explained, give me an answer in the chat to see if that is understood. Then we continue. Okay. Now I'm still on this trade. I like it because it's gonna give good money. Yeah, it's gonna give good money. That's why I say these are long-term trades. So if the person who needs money now, when you say long-term trade, don't come, because once you come, you might not like it. These trades usually take time to deliver. Okay. The most important thing, friends, is we are still talking about different shapes. One, we have said that, for example, an ascending triangle. An ascending triangle is a type of a triangle where you draw a line like this. I draw the line, then it meets here. So if I could have got a breakout here, I would expect this market to continue going up, but I didn't. This was a trap. Now, the next important we have talked about is the descending triangle. You draw a line, then it meets here. It means that the market's being resisted, and you plan to see that the market is now planning, in most cases, to continue to the downside. Once it breaks this support, then you know the market's going to continue falling down. Now, let me find some live examples so that I could be able to define it very well. So let me find some live examples of such trades. Okay, so I will just change the percentages here so that I find better trades for myself. Okay, so let me find one. All right. Okay. Let's take this example, friends. We are in 1 day time frame. Okay, so you a good trader and you analyze this coin very well. So you are looking for an entry opportunity. And before you make your entry, you want to make a confirmation. But this one is also, it doesn't have good moves. You know me, I'm not a person who wants to die with a coin as if I'm the founder. You see, there's a coin you choose to trade, but you are suffering as if you are the one who created the coin. The coin has no movement. So I don't want to look for coins that don't move. So if you are planning to start a coin, just know if it has no momentum, me, I will not trade it. I'm not here to be on the coin as if I'm the founder. You know, there are people who love coins and die on them. Me, I came here to make money. I love that coin. You love it. But me, when I see no volume, you go and stay with your coin. Me, I'm not here to die with a coin as if I'm the founder. I'm not loyal to any cryptocurrency. Me, I'm here to trade to make money. You know, people usually ask me, give me your best coin. My best coin, I look for volume. Me, I'm not here best coin. When I come to trade, I'm here to trade. Best, give me your best coin. Tell me which one is your favorite. I don't have. Me, I look for volume. If there is good volume, I'm in business. If there is no volume, let the owners of the coin die with their coin. That's why me, when they say they are going to delist a coin, and I've been trading that coin. Me, I don't waste time. Oh, maybe. Me, I don't go in maybe. I look at the coin, I say, hey, how much am I losing here? $50. I write it down. Okay. So if I'm losing $50 in this coin, I've noted I'm going to lose $50. Then my next question, what can I do after losing my $50? I'll make it in another trade. Then may I continue with life. I'm not always there lamenting, my money, my coin. I'm not coin related. I don't have any relationship with any coin. Me, I want money. So I'm here to find opportunity. For example, friends, let me say this is our diagonal line we have drawn. And this is our resistance here. Okay. Now, this is one of the mistakes most of you do when you want to trade. Friends, when you are drawing these lines that you want to trade, always look for a bigger frame. Let me, I don't know if I can get it. Now, this one is not good enough, but let me use this as an example because I might spend the whole day looking for coins since the market volumes are down generally. Now, the formula is simple. This is as simple as this. And this is what we call an ascending triangle. And what am I waiting for? For a breakout. Once it breaks up here, how do I measure my take profit? The measurement of the take profit, friends, is very easy. The distance between the lowest point here and here is your take profit always. So I'll just move it and put it here, and that will be my take profit. Once it makes a breakout with good volume, that will be my take profit. And if I draw a cross line at my take profit here, it's around an area of resistance. So once it makes a breakout, I enter the breakout, and that will be my take profit. I'm using an ascending triangle approach. The same thing works on descending triangles. Let me draw them here just to show you. Now, let me repeat this, friends. Do not go to the market when you want to make money. Always come on the market to draw your lines and see if the market respects your lines when you come to check. I was not able to successfully open up my other account, but on my other trading account of TradingView, you find that I find so many coins. You find that I've drawn lines over time. I come on the market, I draw my lines, I leave. So by the time I come to check, I find the prepared food. Am I making sense? Let me know. I don't know if you're understanding me. Give me a 2 in the chat if you understand. I should not come here when I want to trade. No. I draw my lines. Then when I come to trade, I'm just confirming what I did some time back. I don't know if you understand what I'm saying. Now, what can I repeat on that? Give me a 2 in the chat if you understand. I should not come here when I want to enter the market. No, that's not good trading habits. I come here because I had taken up some time of mine, drawn my lines on some trades. So once I find that the market has respected my lines, I don't ask anyone whether it is a good trade or not. I don't know if I'm making sense. Okay, so let's take an example here. Let's say this is my support. Okay, let's say I drew my line from this point above, like this. So this is simple. What is happening here? The market is being resisted here. Resisted. Now, what happens as I'm here, I see a breakout. Now, I told you the other time, and I want to repeat it here. Once you see it in the 4-hour time frame, and you want to make good money, at least in the 30 minutes, the breakout will be making a lot of sense in a lower time frame, forming what we call an area entry in the market. I don't know if I'm making sense to someone. Like here, was this green candle of good volume? Give me some answers in the chat. Was this green candle of good volume? Give me some answers in the chat. Is this good volume? Some answers in the chat. This is in 30 minutes. It means after drawing my line, I have to first give time to prove my testing. I don't know what you mean. I don't know what you are testing. This is a good volume. So at the breakout, I would make an entry in the market without any decree. At this price, I make an entry. How much will be my take profit? I measure the distance. I just come in here, put my price range, I measure the distance from here. Yeah. And then I just carry this as my entry. And that is my take profit. Is that hard, friends? Or it is easy? You draw in a bigger time frame, make an entry in a lower time frame. Is it hard or it is easy? Is it hard or it is easy? I mean, you must have confirmation, you must have a breakout to confirm your entry in the market. Now, there are a few things I haven't talked about that I would love to discuss that are most common ones. And because of time, let me discuss them. Okay, just a few. I may not discuss cap and handle, maybe in the next time. Now, let me just discuss double tops and double bottoms. Double tops and bottoms. Because these are common patterns. You draw your line here, the market comes, turn, retraces a little bit, then it touches again. Just know that what you expect most here, this, it means this is called the M formation. Once you see this one, friends, this double top, it means the market is going to continue going down. The same thing with the double bottom. Once you see the market forming, this goes down, then this, then goes up. Now this one and this one is called a double top. Expect the market to go, sorry, a double bottom. Expect the market to go down. This is a double top. You expect the market to go down. Double bottom, you expect the market to go up. Those are maybe the so common patterns. Okay. Now, we buy at a breakout. We establish a resistance and we establish where the support is. If the breakout happens at an area of resistance, there we buy. You must enter on a confirmation. Do not just enter. Confirmation. Wait, don't get excited. It is moving. Wait it to close. As it closed above your line, beautiful. Make your entry. Measure the distance from here to here. Bingo. Is that hard or it is easy? How do you measure the take profit? The lines are drawn, get saved automatically. You save. You save your work. You save your work even after you have drawn. I don't know if you are using a phone, but a PC, the work remains on. Is the test candle supposed to be red candle only? It is the one that tests the line. But if it is of a good volume and you have moved from a bigger time frame to a lower time frame, you don't need to wait for a red candle. Is a bull trap permanent loss, or it is you can recover? There is no loss in spot trading. Whatever goes down comes up. I don't know what I've taught, whether it is hard or easy, because if you have understood support and resistance, you can now be able to look at trades and say, I expect this trade to go against me. I expect this trade to give me some money. I don't know whether what I've taught is very hard or it is very easy. Just waiting for you, friends. Wow, this was a nice move of the market. If someone had drawn, let me say, if someone had drawn this line to be here, and I had drawn a trend line above the candles, like this, I had drawn here. So if I draw this, if I had drawn this like that, if it was me, I'll just go to lower time frame. Now I'll just go to lower time frame because it's a good breakout. I go like in 30 minutes and I wait. Okay, good confirmation. So I see the market has made a good confirmation. So I just get just back a little bit here, pick my price range, and I measure the distance from here where the market was resisted. Then I just long tap on this, then I carry it, I drag it here at my entry, and I basically will take a 15%. That's how you trade, friends. That's how you make your life very easy. This is this coin. This is in a lower time frame. Let me pick any. So you can be able to draw these lines. You draw them in a bigger time frame, you check your confirmation in a lower time frame, you make your entry. I don't know if I'm making sense. I pick a trend line. I understand that I must draw below the candles. There you go. Good. Okay, then I say I'm gonna construct a horizontal line at where I see the markets being resisted, which is this. Good. I remain patient. I remain now patient. I could even just move it. I don't need to force it. Then I remain patient. So I go now to a 30 minutes time frame. Then I wait. Am I making sense for someone who told me? Then I wait. I don't get excited. I wait. Because two things can happen. This coin can break out, or this coin can break down. Am I clear? This is very clinical. What do you mean? That's very clinical. Is this easy or it is hard? Now, the challenge with most people, you are taking them somewhere. But for them, they want to be very far the other side. I don't know if I'm making sense. You are taking somebody somewhere on a journey, but he has understood something. Now, the challenge is the person wants to be very far from you than you is teaching. That's usually the challenge with trainings. You are still here and the person wants to be there because he has understood something. I don't know if I'm making sense to someone. You are here, but the person wants to be there. So they get disturbed. You move slowly. We have not yet anywhere. We are just now trying to get there. I don't know if I'm making sense. We are just trying to go there. Now, there are other patterns. For example, the flag. How does the flag look like? For example, this is the line. Then from here, I draw lines. It may not be so perfect. Okay. Now the formula is simple. Let me just draw it. The formula is simple. If this is the flag, just this distance from here to here is usually the take profit, but this is not as good as it's supposed to be. Yeah, usually you take they call it the what? This one. So once you draw the line and you draw the line below the candles and you see the market has made it, then after the market forms, for example, something like this, you see the market has respected this, then it has made a breakout. What you understand, this just shows a continuation of the market to the upper part or to the upside. So what you do, you just get this tail here, and it's usually your take profit. So you just measure the distance that was moved by the market from where you started to draw your flag, which is this, Then you measure, you just come and press it here at your breakout, where you're going to make your entry. It was not so perfect, but when I draw a line, just here at my take profit, let's just squeeze it now. Let's see what happened. I hope it hit the take profit. That's how it works with the flag. This is a flag. A flag, you draw your line. For example, I take this to this. The structure is like a flag. Then at the breakout here, you make your entry, boom. And that's usually your take profit. A flag shows a continuation of the market. Okay, a flag shows a continuation of the market to the upside of the market. I don't know whether I'm making sense. Ha ha ha, people need more money than they want to move what? Are we following? All what I'm teaching is getting harder. I'm trying to move very slow. I'm just giving a few common patterns that you'll be able to read. I will not do cups and candles. So on Monday, friends, I'll start on moving averages. So on Monday, I'll start on moving averages, lagging indicators, and real-time indicators. And my favorites, the RSI and the MACD. Then later, I'm going to do the Fibonacci now. So you must be able to understand these. You must be able to understand this because, friends, to prepare you for next week, let me drop my first indicator for this class. But I will just I'm not going to do detailed about it. I'm just going to show it to you. Then I'll start on it on Monday because of time. I'm already late. So the first indicator that I'm going to discuss with you, you just come here on indicators, is called pivot point standard. So I'll start on this on Monday. It's called pivot point standards. I'll explain it on Monday how it works. Pivot points. The challenge is these indicators. They want me to pivot points. The indicator is called pivot points. Do you know how to add indicators? Tap on the plus sign, choose indicators. Then you come here on technique. Then you write in the word pivot. Pivot points. Pivot point standards is the indicator. You tap on it once, it gets on your screen. Once it gets on your screen, you need to tap on the settings. And I'll just request you, there are several, I'll explain what is traditional, what is Fibonacci, Woody, classic DM. So I'll just choose the Fibonacci. That's the only thing you can do about the settings. The other thing you can do about the settings is just to come and reduce this. You reduce the line. This is resistance 5, support 5. This is resistance 4, support 4. You remove these ones and then you press an OK. So it is going to give you, it's going to show you areas of support and resistance if you're not good at drawing them. For example, this is one of the easiest ways of trading. Okay, so these are the lines. You see, it draws the lines for me. Support 3, support 2, support 1, pivot. Resistance 1, resistance 2. So once you are at support 3, you are definitely going to support 2. So if you don't know, if you see the line is the market's being supported on that line, you just measure your take profit from your line to your take to the next support. If it breaks this line and you see the market's being supported on this line, then you just measure to the next line. For example, if someone wants to take profit, just a minute. Let me remove this line. For example, on this trade here, so I can measure from here to here, and I take a 1.5. I'm using a tool, an indicator called pivot points. It gives me areas where the market's being supported, and it gives me areas where the market's being resisted. Are we there? Are we there? Let me know. Are we there? Are we there? You people typing for me website as if you are the one who told me to talk about it. I've already explained, I'll discuss it, not in this class. Someone types it like a million times, you explain. He types it like a million times, he explains. I'm going to discuss the website in the coming class, not this one. I don't know what I'm saying is making business for you or not. I'll discuss in the next class with Coach Mopiwa. I'll be the first person at 10 a.m. East Africa Standard Time. I'll explain the website myself. It has not yet even started giving out the money. It will give, but not now. So this is a very good indicator, friends. Smart money. Sorry, not smart money. This indicator called, I'll explain details of this indicator on Monday because I need to create clarity of when should you use it and when not. Because sometimes people wrongly use this indicator. So on Monday, not today, because I'm already now into something else's time. I see it is already 8:30. I'm supposed to the end of my lesson. Okay, so let me just put it for a time frame. So this is the indicator. It gives areas of entry and areas of resistance. So from support 1, we expect the market to move to support 2. So I can confidently say, the market has been respected here on support 3. So I expect it to go to support 2. So I confidently measure without asking anyone from here to here, and I take 1.2%. All I say, I will wait until it breaks support 2, and I will take my profit here, which is a 4%. Are we making sense? Because if I draw my, this is now where people do not get confused. If I draw my trend line from here to here, and I say, okay, my market has been respected here. Now, where is it resisted? This is resistance 1, this is resistance 2. So instead of going for this one, I go for this one. Is it clear, friends? Give me a one in the chat if it is clear. I've drawn a diagonal line beside to assist my support. that is horizontal drawn by the indicator for me. I don't know if I'm clear. I don't know if what I'm saying is understandable, but you can tell me. Are we there or we are not there? Are we there or we are not there? Are we there or we are not there? So on Monday, I'll come and explain this indicator here. It's very easy, very sweet. Let me check this coin. So it gives let me check this coin. This was one of our trades yesterday, but I saw the coin had. I hope it gets supported because it was ranging from here yesterday, just here like this, not making any moves since yesterday. So I hope it gets some reasonable moves and will make money. All right. Having said that and having nothing to add, allow me okay, let's look at this coin called one, given as a signal. Um, okay, so here it's at support 2. So I can confidently say that this coin can get to this line. It's a very simple indicator. Once you are able to understand how to read it, it's very simple because it draws lines for you. This is support 2. So I can say it can go back to support 1. Because we are not in the oversold, we are just in the oversold area of the coin. That's how simple this indicator is. So if I take it to 30 minutes, maybe it might make more sense. As simple as that. We all see that the market's being supported in this area. That's how easy this indicator is. But I'm gonna go details on Monday. All right, friends. Okay. Thank you for today. I wish you a nice trading experience. Love you all and bye. Which indicator brings those lines of support and resistance? I said it's called pivot point standards. Then you tap on the indicator and make it a Fibonacci. All right. See you on Monday, friends. Have a nice day. I see a hand of someone. Yes, Emma. What?
Well, thank you very much, Coach Julius. This lesson very, very clear. My question is on when you drew that ascending triangle pattern. Now, when you want to, why are you? Yes, when you want to take your take, when you draw your take profit, when the candle after confirming that it is a good breakout with volume, you came into the triangle and drew your line within, then pick it up and went and place it at where you to take profit. Why did you do that? Why didn't you look at for, okay, the question is, why is it that you came into the triangle and drew your take profit, then took it over to where you want to enter the trade? That's what I want to know.
Then it is the best strategy.
Okay.
It is the best strategy that you measure the distance that the market moved before, okay, within the triangle, okay? Then you use it as your take profit. If that doesn't work for you, then what you do, you look above your breakout. Above there is usually a previous resistance. You get when I say that, I believe.
Okay, okay.
You
Thank you
can
very
look
much.
above where there was a previous resistance, then you draw a line, and that will be your take profit. Or you can measure in between to become your take profit.
Okay, okay. Thank you, coach.
Yeah, but never forget to trade with margin calls, because I think I'll just do it on Monday, because I haven't reached that time of talking about entries and how to use the robot to trade. We are still learning on how to analyze. But once we get there, then it means we need to measure. Yes, we have measured our take profit, but we need to measure our margin calls. So we need also to read below and look for a previous support. You know, the resistance becomes our take profit and the support becomes our margin call.
Yes.
I hope it makes sense to you.
Yes, sir.
Sure, good. Right, any question before we come to the end, friends? Any question?